Well, hi folks, welcome to this weekend update. If you're not following me on Twitter, you can find me at ArcisFX. That's my Twitter handle. You'll see that over the last number of hours, I've put up all my thoughts on some of the instruments that I'm going to cover in this video. So if you want the short form and regular updates of what I put in these videos, you can have a look at those on Twitter. And I post up new tweets every day so that you don't have to wait for the videos to come out. So having said that, I'm going to be looking at gold. I'm going to be looking at the euro against the US dollar. I'll have a quick look at crude oil, look at the dollar against the Japanese yen, and of course, natural gas. We've got some big news coming out on the natural gas front this weekend. And I'm also going to have a look at Nvidia, NVDA, the NASDAQ component, which has been going so crazy recently. And actually, we'll have a quick look at SPX, the S&P index as well, because we've reached this megaphone top. Actually, on Friday, we just pierced through the top of that up towards this green resistance line. So we'll have a quick look at that in this video. So let's start with the currency pairs, and I'll leave natural gas for last. So if you're interested in natural gas, be sure to watch until the end of this video. Let's start with the euro against the US dollar. I've got the euro hour chart up here, and there are a couple of things I want you to notice on this. First of all, we've got this long-term downward trend line, which we've now broken. And that trend line goes all the way back to the beginning of May. We're now about a month later, so this is quite a long trend line. We've had 1, 2, 3, 4, 5 touches of this line. And remember, if a trend line gets beyond 3 or 4 touches, it's likely to at some stage break. You can see what happened on Thursday and Friday. We actually broke through this downward trend line, and in the process we made a lower low and we made a higher high. So that's a classic megaphone shaped pattern. That's what we see on these charts. Just drawn in 2 paths which are potentially possible going forward into this coming week. We've got path 1 and path 2. Path 1 retests the top of the megaphone before anything else, and path 2 tests the bottom of the megaphone before moving back up to the top. We've had the non-farm payrolls job report coming out as a blowout number. We've had various comments from the Fed during last week, and it seems we've also got a resolution to the debt ceiling issue, which Joe Biden has now signed. So are we going to see further dollar strength going into this week, or are we going to see euro strength? I don't know. It's really difficult to tell. I think given the reversal of this megaphone top and the momentum of the move down on Friday, I think it's more likely that we'll move down to test the bottom of this megaphone pattern. That would take us to just below 1.06, somewhere probably around about 1.0580 or perhaps slightly lower, 1.0550. However, you can see this channel formed by the megaphone bottom and this downward sloping trend line. And often with a downward trend line breakout, we'll move up and then test the trend line from the top side before moving back up again. So either path 1 or path 2 are possible. If I just zoom in here a little bit, you can see we haven't got down to the top side of that trend line just yet. We're now at 1.07, and the top of that trend line in the next number of hours after the opening will be just below 1.07. So I think we've got a good chance of getting to 1.07 or potentially below 1.06, depending on which path we take. For now, we'll have to watch the price action very carefully at around about 1.07, and I can actually just draw a horizontal line in there as well. And you can see it's also an area of support, sort of just above that spike low, which you'll be able to see more clearly on the 4-hour chart. Let's have a quick look at the 4-hour chart. So you can see that red line is the horizontal support before that breakdown through there and dramatic reversal with that bullish engulfing 4-hour candle with a tweezer bottom. We held above there on the retest. We moved up above there through the downward trend line. Now we need to probably at least retest the top side of that trend line at 1.0680 or 1.0690. And then depending on the path that we take, we'll have to move down to the bottom of this megaphone or straight back up to the top. I think path 2 is more likely for a number of different reasons, and I don't have time to go into all of that right now. But having said that, path 1 is also a good possibility. So we'll have to watch to see what happens if and when we get down towards the top of this trend line, and watch for 4-hour candles and 1-hour candle patterns to see what sort of reaction we get there. If we see a big wick low or a bullish engulfing candle or any other form of reversal taking place at that level, then we'll perhaps try a small long position from about 1.0680 or 90. Or if we just see a move continuing down through there, then I expect we'll have to get down to 1.0580, somewhere around the bottom of this megaphone pattern before a reversal higher. It's possible that we could just range between sort of 1.07 and 1.0640 for quite a long period before the price decides which way to move. So we'll keep a very close eye on what happens at these levels on the chart. So that would be about 1.0680, and if we do get there, about 1.0580. Let me know in the comments what you think about which path the euro might take from where we are at the moment. Let's go across and have a look at the dollar yen, and this is also an interesting pattern, and I've drawn some interesting shapes on here on this 1-hour chart. I'm using the G7 setup. There are a couple of interesting things on this chart too. You can see we've got this long upward trend line which we broke through, similar to the euro, but in this case towards the downside. You'll see that's a tweezer top on the 4-hour or the daily chart. Let me just show you on the 4-hour chart. So you can see on the 4-hour chart, it's a double top. And on the daily chart, it's a tweezer top right around there. And then there's the breakdown through not only a 1-hour and a 4-hour, but also a daily trend line. Let's go back and have a look at the 4-hour chart. Then I want to show you what it looks like on the 1-hour chart as well. The 1-hour chart being the chart that I predominantly use for currencies for entries and exits. But there's that double top. There's the trend line break, the retest of the trend line from underneath. And we see several spike highs on the 4-hour chart. Move down from here. I just need to adjust this Fibonacci level a wee bit. And then I move back up to the 61.8% Fibonacci, which is where we are right now. We broke above that reversal there, which is also a double top on the 4-hour chart and a bearish engulfing candle. We've moved just above there, but just up into the 61.8% fib level. If we have a look at that on the 1-hour chart, that's what it looks like. There's the double top again. Here are these spike highs. There's the 61.8% Fibonacci level, which we have not managed to close above. And the last couple of hours before closing, we saw this potential bearish reversal candle. It's very, very small, so not significant at this stage, but it is a dark cloud cover candle with a higher high and a candle body bigger than the previous bullish candle, which is also a shaven head candle. So that's a bearish dark cloud cover on the 4-hour chart, and also significantly not managing to hold above the 61.8% Fibonacci level. As long as that level holds, I think we're going to be bearish on the dollar yen. We'll have to see how the markets open up in the Asian session in a few hours' time. But if we manage to hold beneath there or roughly thereabouts, during the Asian session, we'll look to trade this short into the European session on Monday morning. If these levels, however, don't hold, and I need to switch back to the daily chart to illustrate this, we need to allow for a move much higher than where we are at the moment. And we'll be looking at the next resistance level. I'm going to pull this one up here. And that would take us up to about 142, which is this previous resistance level here and a previous support level. So that's a very significant area of supply and demand on the dollar yen. And that's at around about 142, just above there, just below there, but at 142. So if we don't manage to hold beneath where we are at the moment today, and after that this double or tweezer top that we saw a few days ago, then we need to allow for a move up to 142 or thereabouts. Switching back to the 4-hour chart, you can see that's the area that we need to hold below overall, that double top or tweezer top on the daily chart. But ideally, we'll hold beneath these subsequent wick tops, forming lower highs as we go along. We've got a slightly higher high now, but we are at the 61.8% Fibonacci. You'll notice on the 4-hour chart, the stochastic isn't overbought yet, but on the 1-hour chart, we have an overbought stochastic. So all in all, I think it's worth trying shorts here, depending on how the Asian session goes and how we move into the European session on Monday morning. So that's two currencies that are worthwhile looking at. That's the euro. You've got the two pairs that we looked at on the euro here on the left-hand side, and then also the dollar yen. And the way the euro dollar and the dollar yen trade will affect the euro yen, the pound yen, and the CAD yen, and all the other crosses. So that's going to be super interesting to have a look at. So we've covered the euro, and there's my tweet on that. And we've also covered the dollar yen. I want to have a look at what I showed on my last tweet, and that's on gold. For all of you gold traders, you'll be interested in this. So we'll go across to the gold chart, and here I have gold amongst all the other metals. I'm not going to be talking about those at the moment, although I do just want to mention if you are trading URA, we're looking for a further move higher on that. We're long on URA right from around about this trend line, looking for a move up into 24, but I'll send out further tweets on that as this week moves along. But let's have a look at gold, and I've drawn similar paths on gold to what I have on the euro. Now I think the gold price is going to depend very much on the dollar index, which of course will affect the euro against the US dollar and the Japanese yen against the US dollar, and I think we're going to see the same sort of effect on gold against the US dollar. So similar to the euro, we could move up from roughly where we are at the moment. That's path A, or we could move down into some of these retracement levels. Actually, paths B and C are my favored levels, but we do have a little toe in the water at the current level for a move up following path A. However, if we fail to hold above 1930 or so on gold, we should expect to move down into around about 1900 or 1880. Some of these Fibonacci levels down here, and potentially even down to 1,780, which is the 61.8% fib. And in an extreme case, which I don't really expect, we could see a test of 1,715 or so, and perhaps even this triple bottom that we saw towards the end of last year at around about $1,630. I don't think that's going to be the case, and I think we're going to find support either where we are at the moment, although we did see a very bearish candle on Friday. It's a shaven bottom candle. We went through that support level. We just broke through that upward trend line, so it's looking pretty bearish. It looks like we're going to get a retest of 1,930 at the least, and potentially a move down into some of these levels below us. And I would suggest looking to buy if we do break beneath there, starting at some of these levels here. And you could pick any of these levels really. And I think the area of greatest demand will be in this yellow zone here, which is sort of either side straddling the 1,880 level. So that could mean 1,900, maybe 1,910, all the way down to 1,850, 60 or 70, somewhere around there. So we'll be looking to buy gold at those sorts of levels. So I've got 3 paths in there. Once again, let me know in the comments what you think gold is going to do next. I favor probably path B in this case. Test down to about 1900, 1880, and then a sharp bounce from there back to the underside of the support line around about 1950. Perhaps a bit of jiggling around there underneath for a while, and then eventually a break up through the underside of this trend line and a move back up to these recent highs at around about 2070 to 75, and then eventually a break higher. So that's gold. So one of the other tweets I've got is on Nvidia. I want to have a quick look at that one. That's this tweet I said here, an abandoned baby within a potential island top. We'll be closely watching the pre-market and US Open on Monday. And this is the Nvidia chart. I'm not going to talk about the NASDAQ, but we'll very briefly have a look at the SPX, the S&P index, after we've had a look at Nvidia. So here's Nvidia. It's a really interesting pattern, actually. So, we've had this huge hype, blowout top, massive rally. Since the beginning of this year, we've moved up from $158, around about $420. We're just holding at around about that level. This is a really good and interesting reversal pattern on Nvidia. We've got this abandoned baby spike high wick top candle within this overall pattern of several reversal candles. So we've got this abandoned baby and we've got a potential island reversal pattern forming here. What we'd like to see here actually on Monday or one of the other days during this coming week is for a gap down and a close beneath this cluster of daily candles, and a gap down below there would form what's known as an island reversal. If you don't know what an island reversal is, go and have a look on Investopedia or have a look in one of your candlestick books. One of my favorite set of books, as you might know, is the Stephen Nisson set of books on candlestick trading. But you can look it up online and you'll find it on Investopedia as well. And we're looking for an island type reversal, which would require a gap down on a close during one of the days of this week, perhaps even on Monday, but it could be any of the following days during this week. We don't want to see too many more candles up here in this cluster to form the island. We want to see a gap down below all of those candles at some stage. As I said, maybe Monday or one of the following days in the week, maybe Tuesday, Wednesday, or Thursday, perhaps even on Thursday when we get the jobs report coming out. If we do see this island reversal forming because of a gap down below this cluster, we'll be looking to short Nvidia. And for more aggressive traders, whilst we're below this abandoned baby candle, which is represented by a gap up and a gap down, you might want to be trading Nvidia short with your stop somewhere above about $425 to $430. Somewhere up around about this level here. We are at all-time highs on Nvidia, so there's not much to go on in terms of resistance levels above us, so you'd have to put your stop loss just above that abandoned baby candle. Targets for this move down, I think at least to get into the middle of this gap, somewhere around about $350, which would also take us to the top of this previous all-time high. And if I draw a line across there at the top, at that previous high, you can see it slap bang in the middle of that gap. That would be a sensible target, but probably we'll have to get down to at least fill the entire gap. That would take us down to about $320 and perhaps down to the big round number at 300. If we are seeing an overall top in the stock markets, then we could expect this trend to break and the price begin to move down through these moving averages. There's the 20, 50, 100 and 200, and it could be that we get as low as somewhere around about the 200 period moving average where it is at the moment, and that's probably in the low $220. So we could see a very dramatic and sudden and catastrophic reversal of Nvidia. I don't know, you'll have to ask the AI bots if that's going to happen, and I'll bet that the bots are betting on continued strength on Nvidia. So be very, very careful. Just because we have an abandoned baby and a potential island pattern doesn't actually mean that's going to work out, and the hype and the craze around AI and tech stocks could continue much, much further than we are at the moment. Whilst we're on that, we may have a quick look at SPX. You can see my tweet. I just said we finally arrived. A little bit cryptic, but what we see on the S&P is this interesting arrangement of various channels. Now we've got this sort of red channel line downwards, which we've convincingly broken above. We've got this channel line here, which is actually also the megaphone top. And we've got another one much higher above that. Let's have a closer look at this megaphone. And this megaphone is actually formed by that downward sloping red channel line and this upward sloping green channel line that's formed by this sort of narrower picture and going across the tops of these candles here. Now, I said I'd be looking to sell the S&P when we got to the top of this megaphone at around about 42.50 to 42.80. We sold it around about 42.65 when the candle reached the top of this megaphone pattern. We're still in that trade currently at the moment. Our stop losses are above this level here. I don't know what's going to happen. I'm a little bit surprised that we broke through the top of this megaphone. However, it doesn't mean that this megaphone has been negated just yet. If we have a look at the weekly chart, you can see we're moving into this area which is not very well defined. We've got a lot of wick lows around about this zone here. We've got this reversal over here. We've got the swing high over here at around about 43.20, and right now we're at just about 42.80. So on the weekly chart, we're running into a lot of heavy traffic which formed previous support. All of these weekly wick lows, spike lows, and we're just moving into that super heavy traffic at the moment. If we manage to hold above there going into this week, that will probably mean it's going to form a support level. We need to get up into 43.20. That's that previous swing high which I pointed out earlier. And it's also the 61.8% Fibonacci level of the entire move down from the all-time highs down to the 2022 lows. So that level there might be just too tempting for the price to try and test 43.20 or thereabouts. The 61.8% fib, the previous support levels around here, the previous swing high over here. And in fact, it might be so tempting that we're going to have to poke through there up to this channel top. And that could take us all the way up to 44.20. I wouldn't rule that out completely, although I think we're going to see some weakness creeping into the market at some stage after such enormous moves higher on the tech stocks. Bear in mind, however, that the tech stocks on Friday didn't rally as much as the overall S&P index, which might indicate a rotation out of tech into some of the other stock market sectors, which could actually buoy up the S&P more than it does the NASDAQ. So just be very careful. As I said, this level here might be just a little bit too tempting to take out some of the stops. There'll definitely be enormous fear and nerves for the bears if we manage to take out this top here at 43.20, and I'm sure there'll be a lot of stop losses and options triggered and a lot of clearing out of short hands if we manage to break above there. It might just be what the market needs in order to form a top. Let's wait and see how that goes. For now, we're short, knowing that we may have to break up above 43.20, and if we do that, we'll have to reevaluate our stance on the S&P. The last thing I want to have a look at is oil before we go across to natural gas. I did put a tweet up on oil as well, and I just want to emphasize once again, throughout the day, every single trading day, I put up frequent tweets. I don't do a video every day, so if you want to keep up with my latest ideas and thoughts on the market, even if you don't like Twitter, and I know some people don't, even if you don't like Twitter, go across and just follow me on Twitter if you want to, if you're interested in my rambling thoughts on what's going on during the market trading days. Let's have a look at oil quickly. So I've got two oil charts on here. I've got Brent crude oil and I've got WTI. The pricing's slightly different, as are the chart shapes. You can see on WTI we had a spike low a few days ago. These are both daily charts. Whereas on Brent crude it was more of an inverse hammer type candle. But that's okay. It's the same sort of timing at the same sort of levels, relative levels. And you can see we've got a triple bottom on Brent crude. We've got a triple bottom on WTI. There was an OPEC meeting this weekend, and the rumor is that we might see another cut of about 1 million barrels per day. And that should be buoyant for the oil prices. We're already seeing a technical reversal and a hold above these support levels, which is encouraging for bulls. I'm busy trading WTI, and my target for WTI is a retest of this downward trend line and then an eventual move back up through there into much higher levels. First target would be around about $84.80, which is where that red line that I've just drawn in there, which is previous resistance and support. Resistance over there, support, resistance, resistance, and then a break up above there up into about $90. And take heed of the big round numbers, $80, $90, $100. The round numbers are always really important when trading oil. Just keep that in mind. But so far so good. It'll be interesting to see how this market opens and what the effect, if any, will be after any potential supply cuts decided upon by OPEC this weekend. Okay, so natural gas. I think what I'm actually going to do, because this video is getting a little bit long, I'm going to record a natural gas video shortly after this and put that up as well today. So we'll have a look at that. There is some news coming out in terms of supply and demand on natural gas, some important news that some of my friends over at Twitter have pointed out to me. But just looking at the technical charts, we really haven't done very much over the last period. We're still stuck in this range. What did happen on Thursday, though, was a breakdown below this red horizontal support line, the 50-day moving average. average and this channel bottom. So that overall is a pretty bearish sign, but we haven't closed beneath this support line over here where the yellow zone starts. You can see that's probably the most important support level. You can see it on that chart. So this is my broker's chart. This is the Black Bull broker's chart. You can see that $2.15 level is a really key level. We haven't broken beneath it on either the NYMEX or my broker's chart. Just going back to the NYMEX day chart, and you can see potentially we've got an inverse hammer candle pattern, which could be viewed as at least supportive. However, having said that, there is some news which I'm going to go through in the next video. I might even cover it here. So if I end this video right now, you'll know I'm going to do another one. If I don't end it this moment, you'll know that I'll put it into the next video on natural gas alone. So that's the overall view. We're long on natural gas from around about $2.29, but it's a quarter of a position size. In other words, a quarter of the overall size that I'd like to get on this. And I'm willing to add more long positions somewhere around about $2, probably another 25% down at those levels. And if we do break and close beneath $2, we should then head down towards $1.80 and potentially even $1.50, where I'll be looking to add the remainder of my long positions on. So since the beginning of the year, we've really been stuck between about $2.50 or 60 and $2, and just beginning to look a bit weaker again, moving down to that crucial support at $2.15. Close below $2.15 should take us back down to $2, and a close below $2 should take us down to $1.80. I'll be looking to buy at those levels beneath us. On the other hand, if we don't close below $2.15, we should see a move back up to the underside of this trend line, back up into the $2.40 to 50 region, eventually up into the $2.65 region, test of the $3 region, and then our eventual target of $3.40, 50, 60, or 75. That's this pink level over here. I don't know if we're going to get there before the end of the year in the winter season, and we could stay ranged between roughly $2 and $2.50 or 60, and maybe $3 throughout the summer, into the autumn, and into the winter season, somewhere perhaps around late November, December, January, somewhere around there, to get up into the $3.40, 50, 60, or 75 region. So let's see how we open up after this weekend. I think I'm going to try and complete natural gas in this video, so let's go across and have a look at the news that's come out that may influence how this market opens up after the weekend, whether we're going to open at the current price, gap down, or gap up. So I put up a tweet yesterday about natural gas, basically saying what I've just said in this video so far. And I got a number of comments from some of my followers. Let's have a look at some of them. Thank you very much to Gasino and Gas Vegas. If you don't follow them on Twitter as well, I think these two guys have got good insight into natural gas. So once again, go and follow them on Twitter as well. You can get a lot of useful information from Twitter, and it's quick and it's easy. And you can set up a tweet deck. Go and check that out as well. It's something I just learned about. And talking about fossil fuels, I think I'm a bit of a fossil myself, and I've only just found out about TweetDecks today. So here's some news. Let's just have a look at this thing here. LNG net flows US total index, and we've got this net flows chart moving down. You can see this big move up over here. And we've got this tweet from Gasino, who retweeted Celsius Energy, it looks like. And the comment here is that LNG export facilities are fully committing to spring maintenance. Volumes will tumble to 10.8 BCF per day today, shown minus 1.9 versus 2022. And a new 2023 low. This drop has been driven by Sabine Pass, which will slump to 2.1 BCF per day, 40% of capacity with 3 trains likely offline. Now, some of you might want to comment on this below the video, but I don't quite understand it. And I'm more of a technical trader, even when it comes to commodities. And I'm not too sure if this means that demand has dropped, or if supply has dropped, or they've both dropped, and what the significance of these numbers are. So you could let me know in the comments. And I guess we'll have to see how this opens up. Sometimes the things that we look at in terms of supply and demand and weather and facilities going on and offline and meetings and all sorts of things that we look at when it comes to commodities and particularly natural gas in this case, sometimes those factors have surprising effects on the price, and it's not always very clear what that effect might be. I don't know how this is going to affect price at the open, whether we're going to gap up or gap down, whether it's going to have a longer term effect on the price over the next number of months or weeks, and whether it's going to be positive or negative for the price of natural gas. I really don't know. So I'd like to hear from some of you to let me know what you think. And I guess what I'm going to do is I'm just going to trade the charts as I see them. And I think my philosophy is a lot of this stuff that you see in the news and a lot of the influences on supply and demand are visible in the charts and the support levels and the movements of the price and the price action, candle shapes, overall trend directions, all of those sorts of things that you see on technical analysis, I believe reflect all of the inputs going into the price. So I'm not 100% sure what this means, and I'm not even going to go to Natural Gas World or Natural Gas Intel or any of those places. But from what it seems from these charts, which are not the natural gas price charts, but other charts, we can see we've reached extreme levels in some of these charts. The year-over-year change in LNG feed gas demand seems to have dropped to a very significantly low number. So that's what we're seeing over there. And it's possible that we'll gap down below the support level and move into this yellow zone, possibly just above or around about $2 going into this coming week. I don't know. I really don't know. And I'm definitely not an expert on weather and rigs and disasters and environmental policies and all of the various factors that go into natural gas. So I prefer to try and keep it simple and trade as much as I can off the charts with a little bit of extra information, extra intelligence, and extra insight coming from some of those other factors that I've just mentioned. And that seems to work for me. I've won 9 out of 10 of my last natural gas trades, so I'm rather happy with those results. But I have a slightly different approach to most people. I think the difference is a lot of people like to trade the shorter term charts or the shorter swings or even day trade natural gas, and a lot of other people like to trade natural gas or fundamental factors affecting supply and demand. I'm kind of a slightly longer term swing trader, and I rely more upon technical analysis of my charts. So let's see how the week opens. I think I'm going to have to do another video on Monday or Tuesday, depending on how this week opens and how the opening gambits or opening plays of this week go, whether we're going to have a big gap down, whether we're going to test or break $2, or whether we're going to break up above these moving averages and the channel line and the resistance levels above us early in the week. I think one thing's for sure though, if we have a look at the average day range, I've just put this indicator on my chart, and I don't use these indicators, it's just for illustration. You can see we're at the lowest level on the average daily range since about July 2021. You can see there was a period of very low volatility back in mid-2021, and we've had very high volatility, of course, over the last couple of years. We've moved back down into this very low volatility range. It's not the lowest it's been. We see prolonged periods of low volatility, but it's certainly the lowest it's been for about 2 years. So I think we're probably due for a few more bigger movements in natural gas. I don't know when those will take place, but now is as good a time as any for us to see a little bit more activity in this price. And let's just see how the week opens. And as I said, I'll probably do another video on Monday or Tuesday. And I think the open today and then the next couple of days will give us a really good sense of the next move or the next direction on natural gas. We may as well just have a quick look at natural gas intelligence and scan through these headlines. I couldn't help myself. So story of the day, technical resistance props up natural gas. Well, that's basically what I said, $2.15 as a key level. But plump supplies and benign weather endure. So yeah, maybe there's just too much gas around and there's not enough extreme weather. That's very possible. And the last sentence here just says near-term demand remains weak. And on the left-hand side here, weekly natural gas cash prices, futures stumble, unfavorable fundamentals. Again, the same thing there, props up the technical resistance, props up the price, and a few other things. Let's have a quick look at Natural Gas World. Yeah, and you see similar sorts of things here. LNG exports fall in May on lower output and changing demand trends. And just on the top right here, there's actually a little bit about OPEC potentially announcing more rate cuts, etc., and a few bits and bobs. But overall, when you see negative headlines for natural gas, it doesn't mean that they're right or that prices are going to continue to slump. But when you see the story of the day, technical resistance props up, but plump supplies, benign weather, futures prices slumping, prices stumble, and all that sort of thing, it doesn't mean that this is correct or that's the direction that we're going to see moving ahead. And in fact, if anything, I prefer to take a contrarian view when I look at news sources for most of the instruments I trade. And as soon as I see panic and negativity on the lower side and overt and overblown optimism on the positive side, I tend to start to immediately want to take the opposite side of the trade. So I wouldn't worry about all of this too much, but let's take into consideration what some of my fellow tweeters have put up about supply and demand. And thanks once again to them. And all I can say is let's watch this price. So last look at the price. You can see the 4-hour trend is just down. There's the support level at $2.15. On the 4-hour chart, we formed a couple of reversal candles there. Nothing very exciting. We did have a big spike low in the last 8 hours of trading and an attempt to move up, but then we just slumped back down straight after that on the 4-hour chart. So overall, $2.15. Are we going to open at about the same level? Are we going to gap down lower dramatically, closer to $2? Or are we going to gap up? I really don't know. Going on what others have tweeted and some of the news that's come out, it's possible that we might gap down. My idea to try and buy some more at $2 and even better to try and grab some more at a much lower price at $1.80 or $1.50. If the price does hold up where we are at the moment and begin to move up through some of these levels, once again, I think it's possible that we'll get back into this pink zone here at around 230 to 250, and then maybe eventually $3 before another move back down. I don't think we're going to get out of the $2 to $3 range for quite a long time. It could take as long as towards year end before we get up into this level here at 340, 50, 60 or 75. If you're not long natural gas at the moment and you're looking to buy, I would actually just wait for the weekend price to open. If we gap lower and if you're willing to stick your toe into the water or wet your beak and attempt some long positions, if we are at around $2 or $2.10, you might want to have a go there. Otherwise, you might want to wait for a reversal candle or a daily higher close or some other form of technical reversal that you like to follow, perhaps a moving average crossover or some other momentum indicator before buying. And I think that's all I really want to say about natural gas. Good luck with that. And as I said, I'll try and do another video on Monday or Tuesday, and we'll see how this price opens up after the weekend, and we'll see what happens in the first 12 or 24 hours of trading. If you've enjoyed this content, please give the video a thumbs up, and if you're new to the channel, why not subscribe? Take care, and I'll speak to you soon.